Imagine this. It's the early 2000s. The US housing market is booming. Hey everyone, and welcome back to the channel. Today, we're rewinding the clock back to one of the most seismic events in modern financial history, the collapse of Lehman Brothers. You've probably heard the name, but what really happened? And more importantly, what can we learn from it today? Let's dive in. Imagine this. It's the early 2000s. The US housing market is booming. Prices are soaring, and it feels like the party will never end. Everyone wants a piece of the action. To fuel this, banks started offering mortgages to almost anyone, even those with poor credit histories. These were called subprime mortgages. Now, here's where it gets complicated. Investment banks like Lehman Brothers didn't just hold onto these mortgages, they bundled thousands of them together into complex financial products called mortgage-backed securities, or MBS. Think of it like a fruit basket. Instead of selling individual apples and oranges, you sell a basket full of different fruits. These MBS products were then sliced up and sold to investors all over the world, from pension funds to individual retirees. On the surface, it seemed like a genius idea. It spread the risk around. If a few people couldn't pay their mortgage, it wouldn't matter much in a giant pool of thousands, right? The credit rating agencies even gave these products top-tier AAA ratings, marking them as super safe investments. This created a massive global market built on American housing debt. Lehman Brothers was a giant in this game, deeply invested and highly leveraged. Leveraging means they borrowed huge amounts of money to make even bigger bets. For a while, the profits were astronomical, but then the music stopped. Starting around 2006, interest rates began to rise. Suddenly, those adjustable-rate subprime mortgages became a lot more expensive for homeowners. People started defaulting on their loans in record numbers. As homeowners defaulted, houses went into foreclosure, flooding the market. Housing prices, which everyone assumed would only go up, began to plummet. This is where the house of cards began to wobble. Remember those safe mortgage-backed securities? They were filled with these now toxic loans. Their value collapsed. The fruit basket was suddenly full of rotten fruit, and nobody wanted to buy it. Panic set in. Banks and financial institutions all held these assets, but no one knew what they were truly worth anymore. The market for them completely froze. This created a massive liquidity crisis. Banks stopped trusting each other and stopped lending to each other. Credit, the lifeblood of the modern economy, dried up. Lehman Brothers was at the epicenter of this storm. They held tens of billions of dollars in these now worthless assets. Their high leverage meant their losses were amplified massively. They owed far more than they could ever hope to pay back. Throughout 2008, the US government and other banks tried to orchestrate a rescue. There were frantic last-minute talks to find a buyer for Lehman, but the hole in their balance sheet was just too big. No one was willing to take on that much risk. Unlike their rival Bear Stearns, which was rescued earlier that year, the government decided to let Lehman fail. They hoped it would send a message against reckless risk-taking. On September 15, 2008, Lehman Brothers, a 158-year-old institution and the fourth largest investment bank in the United States, filed for bankruptcy. It was the largest bankruptcy filing in U.S. history. The fallout was immediate and catastrophic. It wasn't just a message. It was a nuclear bomb dropped into the heart of the global financial system. The failure triggered a full-blown panic. The Dow Jones Industrial Average had its biggest single-day point drop in history. The credit markets, already frozen, seized up completely. This wasn't just a Wall Street problem. Suddenly, regular businesses couldn't get the short-term loans they needed to pay their employees or buy supplies. The crisis cascaded from the financial sector into the real economy, leading to what we now call the Great Recession. Millions of people around the world lost their jobs, their homes, and their savings. So, what are the key lessons we can take away from this monumental collapse? First, for investors, the danger of complexity and the illusion of safety. Those mortgage-backed securities were so complex that few truly understood the risks they contained. Just because something has a triple-O rating doesn't mean it's foolproof. Always do your own due diligence and remember the old saying, if you can't explain it in a minute, you probably shouldn't be investing in it. Diversification is key, but diversifying into a bunch of assets that are all correlated like housing isn't true diversification. Second, for our personal finances. The peril of too much debt. Lehman's downfall was leverage. The same principle applies to us. Living on credit cards, taking out loans we can barely afford makes us incredibly vulnerable to economic shocks. The Lehman collapse is a stark reminder to build an emergency fund, live within our means, and be cautious about taking on debt, especially for depreciating assets. A solid financial foundation is our personal backstop against the next crisis. Third, a lesson in economic history. The concept of too big to fail. The government's decision to let Lehman fall, and then the subsequent bailouts of other institutions like AIG, sparked a massive debate. It showed how interconnected our global financial system is. The failure of one major player can threaten the entire system. This led to sweeping new regulations like the Dodd-Frank Act, aimed at increasing transparency and preventing banks from taking on such excessive risks. The debate continues today about whether we've done enough to prevent a repeat performance. The collapse of Lehman Brothers wasn't just a business failure, it was a profound lesson in risk, greed, and systemic fragility. It reshaped our economy, our regulations, and for many, our entire outlook on finance. It serves as a permanent reminder that in the world of finance, trees don't grow to the sky, and parties eventually end. Understanding this history is crucial to navigating our own financial futures wisely. Thanks so much for watching. It's a complex topic, but I hope this breakdown was helpful. If you found value in this video, please hit that like button and consider subscribing for more deep dives into the events that shape our world. Drop a comment below with your thoughts or any questions you have. Until next time, stay curious and invest safely.